Contrary to myths created by hopeful hip-hop artists, the road to mind-blowing riches is hardly ever glamorous. With a global low-income market of 4 billion people, entrepreneurs with an eye on the big time can no longer afford to ignore this segment of the population. Understanding the complexities of conducting business in the low-income space requires much research, great insight, and most importantly, a product that customers can't live without. Get those right and the rewards could be extraordinary. Joining us in studio to discuss this further, we have Rob Campbell, Strategic Planner at Joe Public, and Dr. Tashmia Ismail, Head of the Inclusive Markets Program at GIBS. Welcome everybody to the desk. Rob, perhaps let's start off with you. Why is the lower income market the new big thing?
Well, obviously it's the growing market. It's the market where it's all going to be happening at. It's the future potential. But I think what makes it really interesting, and the take right at the beginning was how this market is going to make you rich, I think is a slight contradiction in terms for me. I think what one has to do is you have to invest in this market. So you have to significantly invest. So there's no short-term opportunity at all. It's all about the long term. It's all about sustainability. It's all about impact. It's all about being developmental rather than the quick fix going to make you rich quickly.
Tashmia, I see you nodding a little bit there, but perhaps before you maybe concur with Rob, do we understand the consumption behavior of this particular segment?
I don't think we do. You know, firms do well in middle and top markets because they've spent years and years honing their skills in understanding that. And we simply haven't spent the time or the resources in understanding this market sufficiently. Our segmentation models for low-income markets are very underdeveloped. We tend to think of them as this homogenous group who will behave and think in the same way, and yet there's actually a very fine segmentation that needs to be done in that space. So no, I don't think we do.
Tashmia talks about very little understanding about the segmentation for this particular market. How do we hone this and make it better?
Well, that's the tricky part about it. So there's loads and loads of research. The trouble is that what one has to do is you have to turn your research, which is like overarching observation based, and turn that research and observations into deep insights. And finding deep insights into this market is where it becomes particularly tricky. And as older people, and you can see that I'm an older person, what you have to do is you have to rely on those people who are younger, who are more articulate perhaps, and who have lived in those markets and are able to express real insights, which you are then able to translate into marketing effort.
I think that was a really good point that you made in the article, that you have to change the way in which you run your own business before you can even enter that market. Why don't you tell us about that?
So we have this book called New Markets, New Mindsets, and we use the word new mindsets because what you're saying about taking this research, you can't take files of data that someone else has gathered and go back into your air-conditioned office and turn that into a business model. It's about shifting your mindset, and the only way to do this is to actually have empathy for this market. You know, the idea of making development impacts, it's always no fun when I agree completely with a co-panelist. But really this, you know, turning those insights into real product, it's as you said right at the beginning, you've got to add real value, and you cannot add real value into people's lives unless you have empathy for them, and you cannot have empathy unless you're in the market.
Rob, I'm gonna jump right in and perhaps ask you to pick up on some of what Tashmia said, but I want you to also perhaps comment on how this particular segment responds to brands, and in particular brand loyalty.
Okay, well obviously people are really brand loyal, and the reason they are brand loyal is because a brand will bring with it some kind of value. A good brand will be carrying value with it. However, there's an old saying that used to be, let the buyer beware. With new technology and so on, I think that paradigm has shifted to let the brander beware, because as people have become more conscious of value and being able to exchange ideas and values, you know, it's becoming increasingly difficult.
Mark is very quiet today, which is very surprising. But what I'd like to do, Mark, is perhaps get your thoughts on this. I mean, if we look at an example like Capitec, which seems to have gotten it right in terms of tapping into the bottom of the pyramid and that unbanked population. Surely that must have required a significant degree of rethinking the business model of banking. And in light of that, I mean, to what extent are traditional banks having to rethink their business models if they want to tap into a market that would otherwise not have mattered to them?
I guess I've been really quiet because I had probably a potentially career-limiting comment to make on it, but I'm going to do it anyway because it's the end of the year. I'm just listening to Tashmia's comment about the air-conditioned offices. So just before we come on air, we got a tweet via Finweek saying, you know, is it a provocative headline or is it simply channeling Gordon Gekko, which is obviously from the old Wall Street thing. And one of the concepts that Gordon Gekko made was this idea that you could be a stockbroker, you could move money around, and you could simply cash in on everybody else who was the sheeple within, you know, you'd be able to just take advantage of any market as long as you could sit there and move money around. And, you know, I remember going to a presentation with Nedbank actually about 3 years ago, where we sat in this press function and they told us, you know, they've decided low income market, easy, they're going to coin it. And they pop up on the screen these pictures of a branch that they've now set up within one of the low-income markets, and they show all the people streaming around the block. And you know, it came across at the time when they were presenting this as, you know, look at this fantastic success story, but they haven't built the infrastructure in such a way. They've taken a miniature branch, they've shrunk it down, they've stuck it into it, and they've said, look, people queuing around the block for personal loans. And it just comes across as very disingenuous when they made that comment. And I think that that's part of the problem. They're not being able to crack that market at the moment. Yes, a lot of the big four banks have managed to get something into that low income market, but they're not doing what Capitec have done. They haven't been able to position the brand. Simple does, right size, right delivery. And I think that that's exactly the point that's being made.
May I support that with some data? One of our very clever MBA students has just done a survey. The sample size was about 200 people, but what struck me was the brand Beware, where ABSA had a very dominant position, South Africa, largest footprint. We see this very clear demographic picture around who their customers are, and they have an aging consumer, whereas the bulk of the young consumers in the study were all going for Capitec accounts. So I think this speaks directly to your point. You do need to keep adding value. Having a great brand and delivering on what you've always delivered is sometimes not enough. What more can you do? What innovation can I add to my business?
Sure, and I think the innovation is exactly the point. I know we touch on mobile within the article itself, but this idea of people queuing around a block for banking services is a perfect example of being able to not transfer. You know, mobile is an example of mobile banking in Africa is a huge success story. But this idea that you can just queue people around a block and line them up, it's the old argument that they used to use with China, where they used to say, well, there's a couple billion people, they all eat noodles, therefore we just have to sell noodle, get 1% of the noodle market, and you've done really successful. So I think that that's one of the things that, you know, corporates still don't get it in terms of the channels that they're using to be able to target the market. Whether it's a corporate or even an entrepreneur, you've got to find a delivery mechanism.
And go ahead.
What really struck me in the article is we spoke to a guy who does a lot of research in Cape Town into this market, and what he was saying is that what does really well in this market is when you can take a product and break it down into really, really small individual portion sizes almost. Do you think that there's a disconnect between manufacturing and between the majority of our market?
It's an excellent point, and you know, he refers to this Unilever sachet model, where Unilever couldn't sell shampoo and conditioner in India until they started selling it in sachets and people could afford it with a daily coin that they earned. We have a very different sort of economic system, if you will, in this country. We have the social grant. So people get a package of money at the end of the month. People are also paid monthly. And so you actually find that households here will save by buying things in bulk. If I buy the big bag of Millie Meal, I've saved the money, someone's not going to take it for something that we don't really need. So again, it comes back to that segmentation question. You know, segment properly, because there will be the sachet buyers, and there will be people who need bulk. But Mark, to your point, you can't just have a South African model. We're only 50 million people. This is a really small market. And if you want to be successful with low-income business models and the margins are this thin, you've got to think Africa-wide.
One of the things I found really interesting, you know, picking up on this cover story, are the lessons that big business can learn from spaza shops. And I mean, what you speak about now, Tashmia, is almost a reflection of that. But what was also really resonating was this idea of being very flexible when it came to financing. If I don't have money today, I'll come and pay it on the 24th or on the 15th when I do get paid. I mean, how far removed is this ideal from actually happening in a formal business structure?
But, you know, I'm sure that, these guys have got quite a lot of insights. But you know, you look at the middle class South African, and we know what middle class finances look like. Yet people religiously will take the credit card and they'll accept a swipe of a credit card. You know, there are a lot of, the Grameen thing is an example. There's plenty of models where you can use social lending to be able to sustain these kind of models. We seem to believe that lending only exists in the traditional formats because we've got a piece of plastic that changes the game for it. And I guess I'd throw it to you guys as well. I mean, Tash, if you look at the lending model, the way that cash moves through those small businesses, we could learn a lot from that.
Can I disagree?
Go for it.
I think they service their customers very well because they're able to use those local relationships. And I know you're not going to run off because you live up the road from me. So yes, in terms of spaza stores giving people flexibility in payment terms, that's fantastic. But if I look at the way the spaza store itself manages its finances, I think there's a lot of work to be done in South Africa especially.
I agree.
You know, the stock price on the shelf changes. It fluctuates depending on what time of the month it is. If I'm running out of stock and I need to make enough money to pay for school shoes, suddenly the baked beans go up. You know, there's a lot of cash flow issues. So yes, they do give people flexibility, but they've got to learn to manage their own cash flow.
Correct.
And hopefully this is a space where GIBS is going to be playing a bigger role in thinking about how we can transfer skills into this group of spaza stores to just make them cope better with the kind of competition we're seeing coming in from migrant groups.
Sure. I mean, I think the point I was making was that they know their customer very well. And I think that, you know, and maybe this is thrown to Rob, what are the lessons that we can learn there in terms of marketing that these guys are getting right that, you know, corporates can learn from?
Well, I don't know if you're aware, but I actually work on the Nedbank business as a strategic planner. So if make things happen is the ultimate entrepreneurial call to action, then it's obviously incumbent on the bank to ensure that you know, that things are made to happen. And one of the roles that the bank wishes to assume is the role of the mentor as an essential part of this economy. It'd be quite interesting to see, and these are things that we've been speaking about. It would be quite interesting to see how we can in fact collaborate in order to make that mentorship a reality.
Partnerships happening at the desk already. But before we move on, I mean, I would like to think about the Kenya M-Pesa model, which really didn't take off in South Africa, which says that there must be certain factors that make the ground fertile for proper or low-cost products to take off. In light of that, what do you think are the basic fundamentals that a market would have to have in order for a low-income product to prosper?
Well, I think we were talking about the M-Pesa model and technology. I think the ground was much more fertile in Africa because the technology leapt. There was a technology leap, and people leapt with that technology. I'm not sure the ground is that fertile in South Africa, and maybe you can back me up in that regard.
There's been a lot of work done on why M-Pesa didn't work here and why it worked so well in Kenya. And we have ATMs everywhere. Whereas if you were a rural Kenyan person, there simply was no access. It was M-Pesa or nothing. So I think that was one of it. Kenyans are adopters, though. They do seem to climb this technology ladder very quickly. And I'm not sure if South Africans were sort of spoilt by the amount or the range of financial services that we had, but they just didn't see the need to adopt mobile banking as quickly. Also, M-Pesa was the first mobile banking model, not banking, money transfer model in Kenya. Whereas if you look in our market, I mean, years back, Standard Bank with MTN launched a mobile money plan. So our market is a little bit more saturated in terms of offerings that we have. But what's even bigger than M-Pesa now, I'm not sure if you've seen the M-Shwari numbers, and we've discussed this. What was really cool about M-Shwari, which is on the back of M-Pesa but full banking services. You can loan, you can save, you can insure. because this was such a nifty, flexible, cheap service, we find it encouraged people to save. So they had 1.6 million customers in 3 months, and the bulk of those transactions were savings transactions. So it just shows that if you innovate in the right way, and you innovate in an accessible way for your market, you can change behaviors.
Yeah, and I think maybe there's actually a phenomenon. If you only look, Jacob Marocco actually just tweeted it just before he came on show. There's actually an infographic that The Economist has done in terms of, it's basically a tribute back to Madiba, but looking at how incomes have changed quite a lot across different racial lines in South Africa, and it's really, really well put together. But you know, it's amazing to see the acceleration of what we would broadly term black middle class. So I think that you know what you see, you know, economies move in steps, and we've had a very big jump in change in incomes now. But what you're starting to find is that the majority of the population still has been left behind. Yeah. You need to be able to find a way to then take that next step change that brings the that brings the base up.